Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Wolf Richter, publisher of WolfStreet.com. He's speaking to us from San Francisco. Welcome back to the show, Wolf.
Thanks for having me back.
Both the U.S. and Canadian governments released their latest annualized inflation figures. Both are over 5%. Is this inflation we're seeing now in the U.S. going to stick around, or is it just temporary, as the Fed insists?
Well, they're certainly out there saying most of it is temporary, even though there's now language cropping up that says that part of it may not be temporary, and part of it is temporary, and I agree with that. There are certain parts that are temporary, like the incredible spike in used vehicle prices, and there's some other things that are temporary that will go away. You know, there's no way at least in my imagination, there's no way this spike can persist. But as the spike is unwinding, we now see other prices spiking. So it's sort of a whack-a-mole. It goes from one category to another. Now we have new vehicle prices spiking. That just started. We've got all kinds of service prices now rising sharply, and so it just kind of cycles through. And the thing that concerns me is not the specific price spikes, but why they're occurring. Like the used vehicle price spike it's just mind-boggling, you know, because most people don't have to buy a car today. You know, they can wait a year or two and buy something later. They can drive what they have. And most vehicles are not in such a bad shape that you can drive them anymore for another year or two. And so people are buying a discretionary product, something that they could avoid buying, and they're buying it, and they're paying just completely insane prices for this. So this is a voluntary purchase. They're not forced to do that. There's no requirement for them to do that, and they want to do that, and they're paying completely insane prices. And dealers are buying them wholesale at insane prices at the auction, and rental car companies are selling them at insane prices at the auction. And so you have this whole mindset of somehow we can get those prices from the dealers that are thinking that, and then the customers are paying those prices. And the fact that you have this mindset like this, that really price doesn't matter anymore, that pricing has just become this loose cannon, that consumers are paying just whatever. It doesn't even matter anymore. You know, they're just paying for it. And that to me shows that there is a much more persistent change in the mentality that leads to long-term inflation, and that mentality is that consumers are willing to pay for it, and that companies are willing to pay for it when the costs go up, and given that they know that they can raise prices when they're selling their products, they're raising their wages. And so you've got this whole spiral, and it has taken off now. And so now the question will be, will the mindset change? And the mindset meaning that businesses and consumers are paying just no matter what. It's whatever the price is, they're going to pay. And as long as we have that mindset, the inflation spiral is alive and well, and it has kicked off. So the Fed's job would be to stop that mindset, to let people get back off of that thing, and the Fed is doing absolutely the opposite. It's completely ignoring the issue. It's calling it transitory. It has its foot full on the gas pedal, and it's still buying $120 billion a month in assets. Interest rates are at zero. This whole situation is being signaled as not changing, so consumers are just businesses too, are just blowing money in every direction, and price doesn't matter. And so that makes me think that this is much more persistent than anybody can imagine, because, the price spikes themselves, each individual price spike will at least partially undone. Spikes like that can't persist. But they're going from one to the other now, and that won't be undone completely. They'll be undone partially, and then that base becomes the foundation for the next price increase. So I think we're looking at the beginnings of a very persistent period of inflation.
Well, I've noticed a lot of places that had reduced business or were closed during the height of the pandemic, when they've reopened, their prices are higher. The restaurant prices are $3 or $4 higher than they were before they shut down.
Yeah, and you can't blame them. You can't blame the businesses, because the restaurant is now facing hiring issues. They're having trouble bringing people back in, so they have raised their wages substantially. Here in San Francisco, they've raised their wages by several dollars an hour. And minimum wage is already $15 or over $15 an hour. So, they're talking $20 for kitchen help and per hour, and it's difficult to fill those jobs. Restaurants have to make a living, so they add those extra costs to the menu prices, and customers are paying them. And we go to the restaurants and we love it, and we see the higher prices, and people don't mind. It's okay to pay more. The whole mindset has changed. Okay, so it's a lot more expensive. So what? We're going to have fun, and I think that's what we're looking at here. Is that it's more expensive for these companies to do business, and yes, they're able to pass those costs on, because customers are paying, and so the spiral starts.
Government programs to help out businesses and individuals are starting to fade out now. Are we going to see a wave of bankruptcies because of that?
Well, the amazing thing about this pandemic was how bond defaults and bankruptcies by businesses and consumers, and loan defaults in general, credit card defaults, etc., have just shriveled. And there's so much money out there being thrown around in all directions that almost no borrower got in trouble. And that's a very unusual situation for an economic crisis. It's usually the opposite. You usually get rid of debts during an economic crisis by defaulting on them and getting investors to pay for those costs. And that hasn't happened. Those debts are out there. No, there's hardly anybody's defaulting on anything. There's very few bankruptcies. And so the question that you posed is a very good one. When the stimulus payments stop, will we see a spike in bankruptcies? So far, money is extremely easy. It's extremely easy to borrow. Junk bond interest rates and yields are extremely low. They're record lows, and so companies with risky debt, they have no problems borrowing. Same with consumers. Consumers are being asked to borrow, and they've been paying off their credit cards, and banks are desperate. They want consumers to borrow more, and so this hasn't changed yet. So eventually it might change, and then when credit becomes tighter and it gets more expensive or more difficult to borrow, we might see an uptick in bankruptcies and defaults, but that just hasn't happened yet. So as long as money is this easy, it's probably difficult to imagine that we're going to see a flood of bankruptcies.
We'll have more with Wolf Richter right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration, with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Wolf Richter. Wolf, what's going on in the used car market, which suddenly landed on the front pages of the financial media?
Yeah, I've been reporting on the used car market for many years, and I used to work in the auto business, so it's close to my heart. But I'm just about the only one out there in the finance media that reports on it. New vehicles are being reported on, but not used vehicles, even though it's a huge market involving a wholesale business that's gigantic. Where millions of cars are sold wholesale every year. In total, in the United States, 40 million used vehicles are sold. It's a place for rental cars to go after that come out of the rental fleets. It's incredibly important for new vehicles. I mean, it underlies the new vehicle market. And so rarely do we hear about it, except now suddenly every financial paper is writing about it, and even the New York Times and others are writing about it. And the issue there is the incredible price spike in used vehicles. And CPI was reported yesterday, and there's a CPI sub-index for used vehicles. And the CPI for used vehicles spiked by 45% year over year. And I've been reporting on the wholesale prices. They're up like 34% year over year. And trucks, used trucks are up like 70%. There are now numerous reports that used vehicles with low miles are selling for more than an equivalent new vehicle would. And if the new vehicle were available, and a lot of times you have a situation where the dealer doesn't have the new vehicle, the model, in stock and can't get it, and so the customer will switch to a 2-year-old used vehicle and pay more for the used vehicle than he would have had to pay for the new one. And I mean, these are crazy things. These are completely crazy things to think about. And I have no idea what gotten into these people to pay these prices. Why don't they just wait a year or two? But no, they have to buy this vehicle now. They're overpaying by enormous amounts, and dealers are overpaying at the auction. And so far, it's working. But it's an incredibly convoluted, bizarre story that has started in late last summer, so it's been going on for months. I've been reporting on it for months. It's getting worse and worse and worse, and every month I think it can't get any worse, and sure enough, it gets even worse with prices going even crazier. And it's not like there is no supply of used vehicles. There is supply, and it's been coming up, and the demand is about similar to what it was 2 years ago, or maybe a little lower in some months. But what you do have tight supplies, and what has happened is that the rental cars, which buy 2 to 3 million vehicles a year, the rental car companies, they didn't do that last year, so they cut down their fleets because the travel business collapsed, and so they cut back their purchases of new vehicles, and so they're not cycling out the used vehicles out of their fleet. They usually take them to the auction, sell them, and because now the travel business is booming, and they don't have enough vehicles in their fleet, so they have to retain the vehicles that they have, and they're selling them when they have many more miles eventually. So now that these used vehicles go through the auctions with 80,000 miles on them, and instead of 40 or 45,000 miles. And there's a lot fewer of them going through the auction. And then, you have this kind of slowdown in supply that started last year, and prices start taking off. And the interesting thing is that customers kept buying. If people had stopped buying cars when they get up to a certain point in price, and they say, forget it, I'm not buying, I'm going to wait a year, this would have stopped the prices. the demand would have collapsed, and like it did during the financial crisis, the demand collapsed for a couple of years. This can happen in the car business. It's very cyclical. That's fairly normal to happen. And had this happened, the prices would have instantly plunged back down to earth. And that's not what happened. So instead, customers kept buying at these incredibly high prices. And, and now we've got these price spikes that are just head scratchers. Why would a used pickup truck increase in price by 50%, from one year to the next? I mean, it's just insane. And why would you pay more for a used truck than for a new one? And, it's mind-boggling. And obviously this cannot last. At some point, this is going to unwind. And we have seen in June for the first time in months, there was the first downtick in wholesale prices in used vehicles. Just a little tiny downtick, not that much, not meaningful after this huge spike. You can barely see it on the chart, just this little notch there. But now there is growing inventories. Supplies are not back to normal, but getting closer to normal, and demand is close to normal. So at some point, those prices will come down. But I don't think they will come down all the way. They'll come down some, and then people think they're getting a deal, and then they're buying again at these prices that are still substantially higher than they were 2 years ago. So, this is I never would have thought to see something like this in my lifetime. This is just completely out of whack. And pricing is just like, it's just a loose cannon. It's whatever, whatever. We'll pay whatever. And that's driven that market. So, I hope it will settle down pretty quickly, because this is just, it's just crazy. There's no other word for this.
Will the office sector of commercial real estate recover?
Yeah, so there's a lot of hope on that, and it's been getting dragged out further and further, the recovery of the office market. We have a measure of office attendance in different cities that's tracked by key entry systems, and so that is still down about 70% from where it was before the pandemic. In some cities, it's down by about 50%, and in others, it's down by more like 80%. And like such as San Francisco, it's still, you go in the financial district, and it's still dead. There's a little bit more traffic than before, but it's still fairly dead. And so now the question is, how will this go back to normal? And I think everybody agrees, except for maybe landlords, that there won't be a back to normal. Working from home is established now. People will come to the office, but they'll come less often. Companies need less office space to accommodate them. This whole idea that you need to gobble up office space you don't need currently, because you might sometime need it in the future. This is what the office sector ran on for years in hot office markets, that these companies would move in and they'd lease hundreds and thousands of square feet of office space that they wouldn't have anybody to stick into for years. It's just they wanted to have it when they grow into it, and this created a shortage of office space. And now this empty office space nobody's ever been in there, So this is vacant office space that's come on the market and on the sublease basis, and there's tons of it everywhere. Availability in the Houston market is over 30% now. It's just stunning. A third of the office space in Houston is available for lease. In San Francisco, it's a quarter. These are just gigantic numbers. In Canada, Calgary, during the oil bust went through something like that. But that's a relatively small city, compared to a place like Houston. And so these are gigantic amounts of office space that are now vacant and are available for lease. And I don't see this. There'll be improvement. There'll be some people coming back to the office, and there'll be some new companies, and there'll be this, and there'll be that. But there's no back to normal. Yeah, this has changed forever. And,
do you see some of that office space being converted to condos so people could live where they work?
Yeah, that would be a good thing, except that's really, really expensive to do. Yeah, these are office towers. They're built for commercial use. They're not built for residential use. So they're, there's different codes and different things you need to do to watch, and so you need to essentially gut the whole tower and build it out as a residential unit. Some of them, there's not a lot of window space when you're inside, so there's an outside part that has windows, and inside there's nothing. Some of those big buildings are built that way. It's fine in an office, but it's not great if you live in an apartment. And there's all kinds of issues involved with that, fire regulations and different things, so it's very expensive to do. It works in expensive markets such as San Francisco and Manhattan and probably in Toronto and some others where residential real estate is really expensive. And so you can probably do that, and people are talking about it. And I've seen some conversions like that done over 20 years ago in Manhattan, and it took a long time. It was a lot of work, but they got it done, and it worked. So that's definitely a possibility, but this takes many years. You got to remember, these are not empty office towers. There are leases on them. There's some companies are still in them. So before you start converting them, you have to get everybody out. So that takes many years. So it probably can't be done by the current owner. They will probably have to default on that loan, let the tower go back to the lender, and then the lender can sell the tower for cents on the dollar to a developer, and that new developer will have a much lower cost basis, and then they can probably pull it off.
Will governments have to start rethinking rapid transit if the downtown cores don't attract the workforces that they used to?
Well, there is not that much rapid transit in the United States in most downtowns. There's a good infrastructure in place in some cities on the East Coast, and mediocre one on the West Coast in some cities, and then there's in a lot of places there's hardly any. So I don't think that's going to be a huge issue. People will still come into the city, to work jobs that need to be done in the city, and this includes in construction jobs, service jobs in different places, and teachers and firefighters, and there's a lot of jobs that are not being done in offices, and people will still commute into the city to do those. So the need won't go away to have mass transit in those big cities. It will change, however. There will be less driving and less use of mass transit, maybe, and on the other hand, it gives neighborhoods a real opportunity to cater to people who actually live there, to have businesses grow in neighborhoods instead of downtowns, and some of that's already happening. That includes coffee shops and sandwich shops and stuff where people who work at home want to get out, and do something different. And so it will be, there'll be lots of opportunities there for businesses to follow the new trends and try to make something of it.
Wolf, thank you so much for chatting with us.
Thank you, Tim.
My guest has been Wolf Richter, publisher of wolfstreet.com. He was speaking to us from San Francisco. If you have any questions for Wolf or any of our other guests, we'll ask them on your behalf if you send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.